All right, so now what do we do when we dispose of a plant asset? And again, by dispose of, it means we could either just be discarding it or throwing it away, or more often selling it to someone else who can use it. So when it comes time to dispose of a plant asset, the first thing we have to do is update depreciation to the date of disposal. So typically we do depreciation entries at the end of each fiscal year. And so unless we happen to dispose of it right at the end of the year, we're going to have to update the depreciation up to at the date of disposal. So we'll journalize that by recording cash that we receive with a debit or paid with a credit. Sometimes somebody will buy it from you. Other times you may have to pay to get rid of something, a dumping fee or something. Second thing we do is we remove the accumulated depreciation. Remember, accumulated depreciation is a contra asset, so it will have a credit balance. So we will debit accumulated depreciation for whatever its balance is, because we want it to go down to zero when the asset's gone. And then we will remove the asset cost with a credit. Remember, that will have a debit balance. So we want to debit the asset account to bring, credit the asset account to bring that down to zero. And finally, we'll either have a gain or a loss to record. A gain will be recorded as a credit and a loss as a debit. So I actually, when I'm doing this, I find it easiest to do that part last. Yeah, I'm not sure what order they're trying to show us on this slide, but I know exactly how much we're getting paid or having to pay. So I debit or credit cash. I know the balance of the accumulated depreciation account once I've updated depreciation to the date of disposal. So I just debit that amount. I know the balance of the asset account, so I just credit that account. And then anything I need to enter to make it balance is going to tell me either my gain or my loss. And if I have to enter a credit, make it all balance, then it's a gain. And if I have to enter a debit to make it all balance, then it's a loss. That's my process that I go through. So another way of looking at it is, if the amount of cash we receive is greater than our book value, we're going to have a gain. If the cash we receive is less than the book value, then we'll have a loss. And if the cash equals the book value, it'll be no gain or no loss. It means we sold it at a break even, I guess you'd call it. All right, so let's look at an example. So here we have a machine that costs $9,000 with accumulated depreciation of $9,000. So this asset is fully depreciated. So the book value is zero. And it has zero salvage value. So there you go. So to discard of this, like we're just throwing it away, honestly, we would just debit the accumulated depreciation account that has a balance, a credit balance of of 9,000. So we would debit that account 9,000. So now that account will have a zero balance. And we would credit the asset account machinery 9,000. And so now that account would have a zero balance. And we've taken the asset fully off of our books. So this is what it would look like to discard an asset that was fully depreciated. But what if it's not fully depreciated? What if we still have some book value? So here we have equipment that cost $8,000 with accumulated depreciation of $6,000 for the previous years. And we're discarding it on July 1st. The company uses a straight line depreciation over 8 years with zero salvage value. All right, so we know that up to this point, we've depreciated $6,000. So the first thing we have to do is bring our depreciation up to date. If it was a straight line depreciation over 8 years with zero salvage value and the cost was $8,000, we could calculate that as $1,000 per year depreciation. So for selling this on July 1st, we're going to need to record 6 months worth of depreciation for this year to bring it up to date. We already had accumulated depreciation of 6,000. Now to recognize January through June 30th, we're going to do this first entry, depreciation expense, 500, and accumulated depreciation of 500. So that was step one, bringing the depreciation up to date as of the date of the sale. Or of discarding it, okay? Looks like we're not selling it, we're just discarding it. On July 1st, then we record the discarding of the asset. So again, our accumulated depreciation account has a credit balance of 6,500. So we will debit that account, 6,500, to take that account down to zero. The asset equipment will have a debit balance of 8,000. So we'll credit that account 8,000. And like I said, my process is to do the depreciation entry and the equipment entry. And then I see that there's a difference between the two. So in order to make this balance, I had to debit 1,500. And I know if I'm debiting, that's going to be an expense or a loss. And if I had to credit to balance it, then that would have been a revenue or a gain. So in this case, on the debit side, we'll have our accumulated depreciation, the loss on the disposal of the equipment, and then on the credit side, we'll have the equipment. And again, that will take the balance of the asset and its accumulated depreciation account down to zero, and we'll claim that loss of 1,500 on the income statement as an expense. All right, so now we'll be selling a plant asset. This one, we're selling it at book value. So here we're selling equipment that costs $16,000 and has accumulated depreciation of $12,000. We use straight line depreciation at $4,000 per year, and we sold the equipment for $3,000 cash. All right, so a couple things. The first thing we have to do is update our depreciation to March 31st. So that's 3 months worth. We know that we've been doing $4,000 per year. So $4,000 divided by 3/12 gives us $1,000 depreciation for this year up to the date of sale. So we'll do that entry. We'll debit depreciation expense, credit accumulated depreciation. So if the accumulated depreciation was 12,000 and now we've just credited another 1,000, the new balance will be $13,000. Then again, the way I do this is I know how much cash I'm getting, so I debit cash, because cash is going up, $3,000. I know there's a $13,000 credit balance in my accumulated depreciation account, so I debit the account 13,000 to take it down to zero. And I know that there's a $16,000 debit balance on my equipment account, so I will credit that account 16,000 to take that down to zero. And since they all balance, there's no gain or no loss. We had 3,000 in cash, 13,000 in accumulated depreciation on the debit side, and 16,000 on the equipment on the credit side, and that successfully removes the asset from our books. All right, here's an example where we sell the plant asset for above the book value. So the cost was 16. We have accumulated depreciation of 12,000 the previous year. We use a straight line depreciation for 4,000 per year, and the equipment sold for 7,000 cash. Step one, bring my depreciation up to the date of sale. So that's $4,000 per year times 3/12, because it was 3 months during this year. So we'll debit depreciation expense 1,000, credit accumulated depreciation 1,000, which takes our accumulated depreciation account balance up to a credit of 13,000. Then again, I know I'm getting 7,000 cash, so I'll record that. I know I have a credit balance of 13,000 on my accumulated depreciation, so I'll debit that amount to bring that to zero. And I know that my asset has a debit balance of 16,000, so I'll credit that to bring that to zero. And now I can look at the difference. I've got 16,000 on the debit side and 20,000 on the credit side. So, 16,000 on the credit side and 20,000 on the debit side. So that means I'm going to have to credit $4,000 to make this whole transaction balance. And like I said, if I'm crediting, then that's a gain. If I'm debiting, then that would have been a loss. So in this case, I showed a $4,000 gain and successfully removed the asset from my books. And then one more example where we sell the plant asset below book value. So all of the same information, except now we're selling it for $2,500 in cash. Step one, bring the asset up to, or the depreciation expense and accumulated depreciation up to where it should be at March 31st. And then same thing, I know I'm getting $2,500 in cash, so I debit that. I skip the loss or gain because I'm not sure yet. I debit the accumulated depreciation because I know it had a credit balance of 13,000. I credit the equipment for 16,000 because I know it had a debit balance of 16,000. And then the difference between those, 13 plus 2,500 is 15,500. And the 16,000 for equipment means I need to debit the loss of 500. And again, if I have to do this to make it balance on the debit side, that's a loss. And if I had to do it on the credit side, it would have been a gain. So that's my process. I hope it's helpful to you. And again, I hope you have a great week.